Today, I'm going to talk about Netflix stock, and that's because they report earnings next week. So I don't have a position in the stock. I don't care whether it goes up or down. I'm just looking at it as to whether it could be potential good buying opportunity for short-term or long-term investors. So year to date, the stock's been doing very well. It started at around 468ish. Now it's about 623. Earnings expected around April 18th. So let's take a look at how it's done in the past on earnings day and afterwards. So I have a spreadsheet that I created that tracks historical performances for stocks based on whether they beat expectations both on earnings and revenue, and then how they did the days after this. So the 1 day return, 5 days, and 20-day returns. And I've also got their monthly returns here. So I'm basing this data off of Zacks.com. So you go to Zacks.com. There's a section where you can see the earnings history and the sales history, sales guidance. So we've got a negative surprise if it fell short of analyst expectations. It's green if it's positive and it beat expectations. So we can toggle the sales. So you can see sales was a bit of a hit or miss, but earnings more consistently on the green side. So let's take a look in a bit more detail. So the last earnings report, was a bit of a split. The company had it underwhelmed on the earnings side, but beat on revenue. And historically, over the last several periods, there's been more green than red when it comes to earnings surprise. Revenue, again, as we saw, is a bit of a hit or miss, and it can be a bit more difficult to predict just because of both the subscriber numbers and the amount of people who are using the company's ad-based tier, especially now. So if we recap the last earnings report. So this was in January 2024. It was up 10%. It added 13 million subscribers, beat revenue estimates. So also had a good guidance, I believe. So those are the key things people are going to be looking at is the membership numbers. Of course, that's going to be an important one. And the earnings and revenue, whether it's going to outperform on those numbers. So what's a realistic scenario for Netflix? I think that their membership increase was pretty significant last time around. I think there's a potential for it to get higher as well, just because they've got that new ad-based tier that's still in the early stages of rolling out. And as someone who's used the ad-based tier, I don't think it's that intrusive that it's taking away from the actual experience. And I still think that a Netflix subscription has more value than potentially ones that focus more on niche markets, like for example, like Disney, where you got focused heavily on animation, HBO more on adult type of content. Netflix sort of offers a good balance, has a lot of new content, is appealing for parents and who have a lot of younger viewers. So I think Netflix still has a lot of value and could potentially increase its member count. So I think there's a growth opportunity there. And the revenue, that's obviously going to depend on how many people are buying the full membership versus the ad-backed one and how well its ad-based business has gone. So if you look at historical returns, though, holding the stock for 1 day is a bit of a gamble. If you're planning to buy on earnings day and then flip it, that could be a bit risky just because, there's been some pretty significant swings here. We've got a 35% drop, 22% drop, an 8% drop. There's been days where it has been a double-digit return, but for the most part, it seems like if there's a big movement, it's more likely to be a negative one, just because the 10% movements have happened about 3 times, and when there's been a negative one, there's been a pretty massive 20 or 30% decline. So it can be a bit of a gamble if you're looking at just the short term, and especially with the stock already rising this year, it makes it a bit riskier, because if we look at the stock right now, PE ratio of 52, that's fairly high. It's close to its 52-week high. Let's take a look at the stats, even on a forward PE basis of 37. So forward PE, if you're not familiar with it, this is based on where analysts expect its earnings to be 12 months from now. And so if it's already trading at 37 times forward earnings, you can expect that bar is going to be pretty high. So that if Netflix doesn't do really well on earnings, on revenue, on membership growth, then there's going to be some room for that stock to to fall just because it's already trading at a really high valuation with respect to earnings. So it's definitely not a cheap buy right now. It's been doing really well so far this year, but I think this high valuation is going to make it really difficult for the stock to really jump on earnings day, especially if you're looking at the really short term. Now, if you're holding Netflix for the long term, it could still be an attractive investment, but again, its valuation makes it now a bit of a risky time to buy it. If we look at historically on a month over month basis, April generally hasn't been that great of a month for Netflix. You can see it's been red 3, 4, 5 times since 2014. So it's a bit of a mixed bag, but generally April hasn't been a good month for Netflix. So if you're looking again on the short term, between its high valuation, its historical performance of being a bit more on the red side than the green side on the 1 day return, it's a bit of a risky stock. I wouldn't suggest buying it for the short term just because it's going to have a high bar to reach to beat expectations and to really do well. If you're looking at the long term, obviously a very different picture, but I still think you're probably better off waiting for the stock to inevitably fall in value, just because I think its valuation is just way too high, and there's a chance that it could go lower if it doesn't hit it out of the park with a really good earnings report. I've also got a table here that shows you, if you invested $1,000 in the stock and held on earnings day. So if you held on for 1 day, for 5 days, for 20 days, so you can see on average you would have lost $150 if you invested $1,000 on earnings day and sold by the end of the day. If you're looking at 5 days, you're basically breaking even. Over a 20-day period, over about a month, you're sitting on a 3.7% return. So as a longer term hold, it may be attractive, but I still think there's more of a reason to hold off on buying on Netflix right now, just because its valuation is really high. Economic conditions aren't that great. There's still a lot more competition. Even though it's a good value option for consumers, I think that it's going to be hard for it to do well enough that it's going to just blow past expectations and continue to soar even higher, just because that valuation is really high right now. And with the markets starting to cool off a little bit, because concerns are interest rate cuts may not be happening as soon as people expected, I think there's a bit too much risk in the stock right now. I still think it's a good buy for the long term, but I'll suggest holding off on buying it, just because I think the stock could go lower. So I wouldn't suggest buying on earnings day or before earnings, just because it could have a bit of a dip, especially if the markets are starting to cool off.